The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We posted the charts for the DAX and the FTSE. The good news in all of this, folks, is the markets are trading normally all over the world, which is really good. I've just posted a chart of the Dow E-mini overnight. You can see we had the gap down, and now we rallied up to a 61% retracement, down to a 78% retracement, and of course these swings are 700 and 800 Dow points, which is quite a bit. Now we're sitting exactly at the 78% level right now as we speak at 21,681. We'll see what happens towards the end of the day. I thought what I would do is just give you a little bird's eye view of what I've been looking at here. With the E-mini today, I'll bring this up and you'll see that we have a potential here for, and hey, believe me, this is a potential, folks. It really doesn't mean very much, but you'll see here that the potential is that we might top here near the opening, near that 25,700, 2570 level. By the way, folks, we have some bad news. Jim Twentyman's younger brother, Mark, is down in Florida, and he has the virus very, very bad. He's on a ventilator in a coma, and he's not expected to make it through. So a little white light for his brother. He's only 68. Wasn't in the best of health, but he had been to Vail skiing, and when he got back, he ran into this disease, and it's really, and his girlfriend who was with him didn't get it at all. So, but he's in very, 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 very bad shape. There's a small chance that he may get. They gave him about 20% odds, which is not very good with this stuff that's going around. So it's the first one that we've known here personally that has it. So it's a toughie, and it's probably not going to get any better for a while. But the fact we are seeing some positive signs coming up, I think the best thing you can say is that when the president comes on, he puts it on in a positive light, which I think is good. He tries to tell it like it is, and you can beat him up whatever you want, but I think he's doing a hell of a job, given the fact that the cards he's been dealt are not very, very good cards. That's for sure. I wanted to talk just a little bit about the gold market here, folks, because as you know, I'm pretty bullish the gold market, but I'd like to show you this chart here. This is what's happened this time in the gold market between the April and the June. You see the red circle up there? That's the April and the June spread. In other words, the price of April has been going down related to the price of June. Now, that is an historical distance here that we've had happen. It's happened before, but nothing like that. Now, the open interest in the gold and the silver and also platinum is not increasing. I mean, you would think with the market getting at these levels that open interest would be increasing. However, if you go to try to buy silver rounds, sure, the stores are closed now, but in California and some other places that I checked, it was very, very difficult to even find 2 or 3 pieces of the silver rounds. Those are the ones that look with the eagles on them, and it's really hard to find those darn things. And I don't know how it is in the rest of the country. And I understand spot gold is very, very difficult. Those of you that follow the news a little bit on gold, we found out over the weekend that all the Swiss refineries have shut down. And that's a big section here to take a look at. Now, I had one of the worst things happen to me yesterday afternoon, when the markets were just opening. Someone hacked my Gmail account and used it for spamming, and I got shut down completely of all emails. So I've not been able to do that. I was able to get the letter out without. That was luckily. That was early Sunday morning, and then later on I got shut down. But all is good now. We're up and running. We kissed and made up with Gmail and everything is okay. All right. Now, the first question we have is from Jeff, and he was in the soybean trade that we looked at. Just let's get this up here and take a quick look at it here, and we will get it up here to this level. Okay. And let's get this up here and take a quick look at it. All right. Yeah, the Russians are hacking. Yeah. Okay. You see that support that we had down there? So we rallied about 2 points, just about $1,000, but it missed his buy point by 2 ticks. And his question was, what do you do in a case like that? Well, actually, it happens all the time. Whenever I miss it like that, I just go to the market. I just sell it at the market, because you're talking about $12. And, I would prefer to, not to worry about it. And remember, it took about 8 or 9 days to get to that point. So yes, I would certainly, that's the way I would do it. But, hey, you have to take some flexibility with this, folks, because, you're not going to get the exact highs or lows. God only gets those, and she doesn't trade as often as you might think. So let's pay attention to that. By the way, we're going to have Shane Smolyan as our guest here at the break. He's going to talk to us about what the Fed is doing. And also today or tomorrow, I think it's tomorrow, well, I'm doing the best, yeah. Tomorrow, the one that we are going to what I suggest you to do is go to stockcharts.com tomorrow, because Larry Williams is going to have a recorded 1-hour presentation on what he thinks the Federal Reserve is doing. And Larry's a pretty smart guy. Remember, he was buying last Sunday when everything was limit down, and we had a 30% move off the bottom. So you have to certainly give him a lot of credit for that. That was one of the greatest calls of all time. So we'll see what's happening here with some of these things. So let's move on to another question someone had is about the silver. Why is silver lagging so badly to the gold? Folks, I wish I knew that question. I mean, you would think that silver would be trading at around $17 compared to what the price of the gold is, but that is not what's happening. And I don't know if that's I don't know how you're going to be able to get deflation with all of this stuff that they're pumping into the market, folks, the Federal Reserve. I just really don't look at the difference. Now, you see that spot gold? That's because the gold line is spot gold, and that's the April contract. You see how the April contract kept going down, whereas the June contract is way up there near the top. So that spread just totally collapsed. But what we're looking at here is you can see silver, which is the candlestick bar. We haven't even made a 50% retracement of the high from back in February. And we started 10 cents higher last night, and then we sold off quite a bit. But the key to this gold market is if we get below I believe the number is 1585 now in the spot gold, which is June. And June's trading around 1635. If we get below 1585, that's going to be a really, really important number to say, wow, this might be over in gold. And the second thing is in the silver, if we get silver below, silver now, we're looking at July silver, if we get below 1360, I think it's 1365. Yeah, 1365 in July silver. That'll be a big sign, red flag that maybe everything's not running in Daytona like we thought. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I wanted to bring to your attention here the U.S. dollar index, because you remember last week we were saying there was a potential double top in that index, and of course it certainly did. That made a higher high than it did in 2016 by about 5 pips, and didn't go any higher than that. Boy, if that wasn't a sign of a double top, I don't think nothing was. Now we backed all the way off to the 78% level in the dollar index, so we should start to see the dollar index strengthen. We're starting to see it a little bit. Those of you that subscribe to the 24/7, I was able to send out before I was hacked. Sunday morning I did a few videos. I did one on the stock market, and I did one on the gold market, and I did one on the foreign currency, and I believe we were talking about the euro. The fact that it was setting exactly at a 61% retracement. Now, the futures itself, the futures at the CME, which is a much smaller market, it's like less than 1% of the foreign exchange markets, it missed that number by about 20 pips. So I'm not sure if that's just due to lack of liquidity that time of the night or whatever it was, but it did miss it. So watch that 112.20 level in the euro, because if we should happen to get up there, we've broken about 80 pips tonight, so we'll see whether it's going to be looking out. I see here that someone's mentioning that Charles Ninner, I don't know who he is, but he predict $5 oil eventually. That's not crazy, because it started at $1 oil and $1 a barrel way back in 1896 or something like that, when we were getting away from whale oil. I don't know. I do believe that the price of the crude is going lower. That's another one that we were looking at, because it certainly appeared that we were going to have a situation where if you just take a look here. This is the longer-term chart now. This is the daily that's spread out here in crude oil over the, cycles research. That's good. Okay, here you go. You'll see here that we do have, you can see this is a daily chart now, and I'm just drawing in. You can see those black lines are the ABCD lines. The red one is the other line where we went through. But look, see the target on this last ABCD comes in at $12 a barrel. Now we nicked below $20 a barrel today, but we didn't collapse. The fact that we didn't collapse was pretty good. The good, there's a lot of good things that'll happen through this, folks. I mean, marginal businesses that probably should have been, closing the doors will be forced to close their doors, and the businesses that are still around are going to be stronger. The question is what the price we're going to have to pay with all the money that's coming in from what the Fed is printing. Folks, we have to pay taxes on that. It seems like it's free money, but, actually it's not free. So the Federal Reserve is pumping money in like never before, and hopefully when we have Shane as a guest here in just a few moments from thewolftrader.com, he'll give us some ideas of what we're looking at as far as some of the things that might happen. And you have to be prepared here, folks. Remember, the Fed can come in at any time and move the markets very, very quickly. So if you're not using stops in these kind of markets, throw your money away. They're talking about Dow 5,000. Folks, there's a possibility of that, I suppose, but I think that this thing will. Hey, we were due to top anyway, folks. This was the top of a big ABCD bubble. Let's just put the bubble up here. You can see. Let's just show you quickly here. I saved this to look at it. This is from Bloomberg, and you'll see here that you'll be able to. I'd never heard of that Charles Nenner either. So you know what? He's never heard of me either. Anyway, here's the. You can see these are the different collapses that we had. This was the gold run in 1980, and then you can see the Nikkei hit 39,000 in 1989, and then we had the tech bubble in 2000, the housing bubble in 2008, and then we had the big bubble of bubbles here, possibly that we're looking at here recently, and we don't know. There's so much fake news out there, folks. I don't know what to believe, and so I really try to stay away from it and just look at the charts. I watch the death rates with my friend John Jameson each day, and we're above the rate we were looking at, but it's starting to look a tiny bit better this morning. The reason why it looks so bad here in the U.S. is because of what happened in New York. And, there's going to be others. This is not going to stop for at least a couple more weeks. I don't know. We could, looking at these prices, folks, I mean, that doesn't mean a whole lot. Let's just give you a quick lesson. This is from just try to give you the best I can here. Hold on here. This is from three estimators. Okay, first is Credit Suisse. Now, they hit their estimate. We did hit 2170. So the Credit Suisse estimate was good. Goldman Sachs is saying 2,000, and the Bank of America is saying 1750. What they're not showing you here, it says as of March 20th. It doesn't show you any time of when. And when is important because that's what you want to be looking at. This is what we want to try to keep an eye on, is when these markets are going to show us that we have some type of a bottom forming in here. And it doesn't look like that is going to be the case very, very soon. I don't know. But you know what? Nobody else does either. The really good thing today, folks, we opened down about 60 or 70 handles Sunday night and immediately started rallying back to get positive on the day. We've had a tremendous rally of 1,000 points in the Dow. I mean, these 1,000-point swings are nothing anymore because we see them all the time. We saw 2,000 points in the last hour in the Dow Jones on Friday. We had a tremendous run up and then a run down. I mean, that was one heck of a big move. Here you can see what this Dow did just Friday, and we're having swings like you've never seen before. So keep in mind that these are not ordinary times, but these are good trading times. We're going to see great volatility. We're going to have some really good stuff, I think, here this coming week in the commodity markets. We're looking for a buy in corn And also, buy in the hogs. They've just absolutely massacred hogs and cattle, and the people are not going to stop eating. The question is, how is the food going to get to the people in the supply chains? We've got lots of problems facing us, but we'll get through them. The main thing is you want to please stay home, because that's the thing that will keep it from spreading too badly. That's the bad part about this disease. Even though it has a death rate under 2%, it's still, and most of those are old people. Raise your hand, Larry. And that gives you a chance of survival quite a bit. But look what it's doing. It's shutting down the economy, and that itself can be pretty bad, because if they're not going to be able to support you forever, the government. Well, unless you're a Democrat, of course, then they will. Oh, bad thing to say. All right, let's move on to the next thing I wanted to go. We got a break coming up here, and then we've got Shane Smolyan coming on, and we'll be able to see what he has to say to us. It's always good information because he follows the Fed quite a bit. Plus, the Astro stuff is very, very good. We'll be doing some of these things very soon. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he's watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Shane Smolyan on the line, thewolftrader.com. Are you there, Shane?
Good morning. Is this the office of Duke and Duke?
It's going to be if I have any more trouble with the email, that's for sure. Yeah, this is Duke and Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Tell us what you're looking at with the Fed, my friend. People are asking questions about it.
All right.
Go
Well,
ahead,
let's get started here. First of all, if you guys want to reach me, wolftraderfutures.com, and the Twitter is at wolftraderfutu1. So just to clarify that, because there's been a few wolf traders out there, but this is the original one here. So the first slide I want to show you guys here is the gas prices. So this is actually a real gas price. I took a picture of it. I was at Costco. It's $1.55. This is it's the cheapest I've seen. And I don't, Costco is cheaper than the rest of the gas stations. Most of them are at about $1.96. But that's, I think, a very powerful number. And it's got to be stimulative to the economy. And I think once we turn out of this, that the gas prices are really going to help us come out. Can everybody see that image? Can you see the image of the gas?
Yeah, it's sure. $1.55. Yeah, that's
sure.
Good. It's $2.13 here in Tucson. So
oh wow,
go ahead. Sorry,
that's still a good price.
Yeah. Well,
okay, so
better.
The confirmed corona cases. I'm going to start out by talking about corona here, and this is as of today. So we're at 724,000, and in about a week we're projected to be at about right around 1.4 million up into here. But one of the things to remember about this is that as the testing increases right now, we may be looking into the past. This might be older data, and it likely is definitely older data because we're starting to lead the world now in corona. So that's one positive I think to come out of this. That it's probably not. We could be approaching a peak sooner than this looks right now. Now, a couple of things. I want to point out 5 reasons why COVID-19 is not the flu, because a lot of people put out there, people don't talk about the flu. It's killing just as many people. And I want to put to rest some rumors here, okay? It's a very different virus. It's 2 times more infectious than the flu, possibly 3 times more infectious. So you're more likely to get it if you come into contact with someone. The incubation period is 3 times longer. You're 5 times more likely to visit the hospital, be infected and visit the hospital than you are with the flu. It's 10 to 34 times more deadly, and you can actually get a double positive with COVID. You can be negative and then test positive again. About 5 to 10% of the people are going through this. So I just wanted to point that out, that it's not the same thing. So that's really not, that's misinformation if you say that. It's a much more serious situation than that. Now, this is the astrological point that I've been looking at. I think this describes exactly what's happening. This is the Aries point right here. So we look at the Aries point whenever there's an issue with the world. The Aries point is what we look at. That's by textbook definition of Uranian astrology. The world is the Aries point, and 0 degrees. So we have the midpoint of Saturn and Admetos right on the 0 degrees Aries point. And that, by definition, the definition of that is stagnation, disease lows. It also means everything is shut down. So Saturn is contraction, and Admetos is anything that's in a compacted form. So when these two come together, that's really kind of a low situation. So there was a good possibility that this hit about a week ago, this exact midpoint, but that coincided with the lows of the market. So that's what this planetary picture describes, and it describes what's going on in the world. Now, this point is going to be zigzagging back and forth for the next few months. And I've contacted our friend Alfie Lavoie, and he's helping me get these midpoints on the chart. And once I get those on the chart, I'll be able to give you a better feel of where that's going to zigzag back and forth, because we can look at it like a transit. So just something.
Okay, Shane, we have a question from someone about the Aries midpoint. I know it's different than the usual astrology. Can you explain to them what that means? I mean, because I don't know it either. I mean, Bill Meridian's big in Iranian, but I don't know anything about it.
So Uranian astrology was developed by the Germans in early World War I period. And they added 8 extra points called trans-Neptunian points. One of these is called Admetos here. And the way that they define these points is they actually rectified when the bombs and mortars were landing, and they wrote down with precision when these points happened, and they actually came up with these orbits. And so what happens is when you get these 2 planets, what Uranian astrology does, it looks at the midpoint. So this point here, Admetos is equidistant from Saturn, it's equidistant to the sun as Saturn is. So what happens is those 2 points come together and they make a midpoint, and the energy peaks like this. And so you get this midpoint when they act together, and the orbs on this are very, very small. I mean, we're talking about less than 1 degree. So you're talking about a level. This is German precision in essence. And so that midpoint is right on the Aries point. So it's like it's a perfect picture. This is like it's a crystalline structure as these make. So this type of astrology is based on precision, and so that midpoint is hitting right on that Aries point. So that's describing what's happening in the world. You will not get a global event like this without it showing up in the charts like this. The same thing happened in the 2016 election. I was able to use the midpoints to figure out the election, the Donald Trump election. And I actually put out a report on that before. I can send anyone the report if they want to see that. Now, 8 positive outcomes of COVID-19. Let me tell you, there's a lot of positives to come out of this. So I focused on the negatives. Let's talk about the positives. People are getting rest. You know, people are burnout and they're working long hours, 2 and 3 jobs. People are finally getting rest. And I think that's important because, you know, I see people, I've seen more people in the last couple of weeks in my neighborhood than I've ever seen. I mean, they're walking around like zombies because they're just like, I look in the streets and everyone's out exercising and they're trying to keep their distance. But I think they're getting rested and actually want to get out now. People are working together. Climate pollution awareness. You know, China, they can actually see the sky now, and in Italy, they can actually see the fish in the water now. So that's important. The Fed acted early with record stimulus. Okay, that's really important because this time they didn't wait around. The engine to the car is not bad. Okay, we don't have a bad transmission. We don't have a bad clutch. We don't have, you know, it's the engine's not bad. The economy, the car was turned off. So I want to put that point out there. There was nothing wrong with the economy. We just shut it off. So when this turns back on, I think it's going to be very powerful. I think globally, you're going to get an economic reset from this because you're getting stimulus now from the ECB and the IMF, which is huge because those countries were lagging behind us. And then, of course, the low oil is stimulatory for the world. Flu season is almost over, which is good. And a massive bull market is likely to follow. And I just want to point that out, that you cannot compare this to previous bear markets. One, for the reason, like I said, the engine is not bad in the car. We just turned off the car. Okay, number 2, we've never seen the Fed do what they're doing. So you cannot compare in the past what the Fed is doing to what they're doing now. This is a lunar cycle here. Now, this is in the newsletter, so this is new. I'm putting this in here on the newsletter because this is the lunar cycle by sign. And it actually resurfaced itself in the last month. It radically changed the lunar cycle just because of the price action we've had. And now we're currently in Gemini, which I'll get to when we come back.
Yes, we're going to take a break, folks. 877-927-6648. Shane Smolyan, WolfTraderFutures.com. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in a tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smolyan. It's WolfFutures.net. Sorry, someone said something funny on Skype to me, my friend. You want to continue on, please?
Sure. I'll keep moving here. But the last chart, I was just showing the lunar cycle. In essence, it has resurfaced itself. It's rechanged in the last month. So that's out now, and that's in the newsletter. And if anybody wants to sign up for that newsletter, it's a 7-day free trial. The same is true for the Twitter. The Twitter is like an expanded version of the newsletter. You get charts every day, but there's a free trial there if you guys want to go head over. And also, here I want to talk about the Fed now. Now, the Fed is actually talking now about buying stocks outright. So this is now in the picture now too. They're talking about also buying up municipal debts. So they might be actually buying outright stocks. Now, I think they're already doing this behind the scenes with the Fed juice indirectly, but they're talking about like a direct purchase of the SPY and these. And that's psychologically, I think that's more of a psychological gesture, but I think that's important. Now, these are the Fed purchases in the day. Now, this is really important because they had $82 billion in a day. I track this every day. I put this out on the Twitter so you can see this. I plotted on the chart so you can see it. But they actually purchased $24 billion of that at 3 o'clock. And when we had that 3-day record rally, they were backloading the day with these purchases. So what they're in essence doing is they know that they need the close to be strong. So what they're doing is near the close around 3 o'clock, they're punching it hard with these purchases. So keep in mind that the Fed is going to buy unlimited treasuries and securities. And now $75 billion per day. This comes out to about $1.72 trillion by next month. Now, just to put this in perspective for people, all of QE1, all of it was $2.1 trillion across all the months into June of 2010 or 2009.
Wow.
Now it's June of 2010. June of 2009 was when it ended, and so this is all of QE1. So in 1 month, we might equal that or get about 80% of it in 1 month. So that, just to put that in perspective for people. Now, this is the bond spread. And I've started covering this because a lot of subscribers have asked me about this. So this is the TLT versus the high yield bond. And what you want to see here in a recovering market is you don't want to see this. You don't want to see a wide spread between the high grade stuff and the low grade stuff. And what's actually happening now is the bond spread is starting to come back. That's important for companies, municipalities, even though the world is essentially shut down. That's important to watch because these spreads need to come in closer for us to get any type of a recovery going forward here. Now, just to show you guys here, this is the Fed here These arrows down here, this is last Friday. Now, I want you to see this. Every time the Fed comes in, you see there's a rally that follows. You see this? You see this? There was only one time that it didn't rally, but every other time the Fed comes in, exactly when they come in, the market rallies like this. Now, of course, we had that big sell-off on Friday near the close, and this just illustrates, to me, this illustrates the bearish forces that the Fed is fighting. I mean, this is an incredible tug of war that we're witnessing, and we've never seen anything like this. But the 24 billion purchases are coming right around 3 o'clock. And this is a day-by-day thing. I mean, this changes literally by the hour. So I might have to change this by the end of the day today. But this is as it was as of Friday. And on Twitter, I'm able to give people this information so quickly. And that's the beauty of the Twitter, is that I can give this information out quickly as it develops. And I'm able to, and because I watch the Fed so much, I'm able to analyze what they're doing. And I'm fully in support of what they're doing. I mean, to me, this makes complete sense. This is why we have a Fed for specifically for these type of situations. Now, this is the daily version of the Fed use, and I drew these arrows here to show that the Fed has continuously ramped up this daily Fed use here, and you can see that eventually now the market is starting to follow this, which is very important. And when you price the S&P in terms of the Fed juice, we're actually pushing down to these new lows down into here, which is important because you want to see the S&P when priced in Fed juice at these low points if you want to see a rally to come up in the following days, and that's what we have right now. So that's really bullish stuff. I mean, I'm really happy to see this because finally I feel like we're getting some type of the Fed is getting some type of a control on this market. Now, Fed cannot hold up the economy by itself if the economy is shut down, and I recognize that. But if we can just kind of hang out around here and stagnate and rally for a little bit, I think we got a good chance to recover. And I know a lot of people are talking about, bear market for 2 and 3 years and all of this, but I think you got to consider the fact that, like I said, the car engine, we shut off the engine. The engine was fine. And number two, we've never seen this before in past bear markets. So if you're trying to compare this to 1987, to 1931, to 2008, you can't compare it because those markets didn't have this. I know we had a Fed and we had interest cuts, but interest cuts are nothing compared to what they're doing now. Absolutely nothing. So you got to understand and look at this in the context of what is happening right now with the Fed, and understand that these things affect the markets. And if you don't understand the Fed, you cannot understand the markets. I mean, that's my view on this, at least. And that's what I put out in my service. I mean, we're the only ones that put out the effects of the Fed on the markets, and we're the only ones that put out this planetary speed index. And I think together those two are powerful tools on the markets. You can see down here, this is the Fed juice here. This is the daily chart right now. So we're in an up period here in the Fed juice. The Fed juice has gone into a buy, and we've had these arrows. You see these clustering of arrows down here? Look how good these were at signaling a bottom. This was the planetary speed index here on the 22nd. This was the solar cycle on the 24th, and then the Fed juice went into the buy on the 28th. And that Saturn Admetos midpoint was also right around here, which that by definition, like I said, that midpoint is the definition of a low on the market. So I would hopefully we can hold these lows and we can just kind of drift around. I think we have potential upside here for at least another week, and then after that we'll see what happens. I mean, this is a day-by-day thing and a week-by-week thing, but right now I'm very pleased with what we've seen with the Fed and how they're acting. I think this is what needed to happen, and if we have any chance of coming out of this, they've done all the steps they need to do. So I feel pretty good about it. I mean, to be honest with you, and I would not be surprised if the economy opens back up to see this, rally right back up and then just keep going, because this is not a typical bear market and this is not a typical Fed stimulus. And if that global economy gets going again, I think you could easily see this recover and go right back up. Now, I'm not minimizing COVID. I know I fully recognize the seriousness of it, but I think if we can get the economy going again, you're going to see a powerful response here from the market. And the volatility is so high that I think it could easily jump back up, to that. We went to the 31%. If we get to the 50%, 61%, if we get to that 78%, forget it. Everybody's going to jump in, and I think it's going to be rally time. But we got to get there first. So one step at a time. Right now we're here hanging out at that 38% level, and we haven't got anywhere near that. So.
Wow. Do you want to tell the folks how they can reach you and the services that you have, Shane,
Sure.
please?
Absolutely. You guys can go to Wolf Trader Futures. This is a screenshot of the site. So up here at the top, there's some bars here. Now you can create a free member login, and I send out email updates, and I put some videos and some charts there on the free member area. The gold member login is the Twitter, and then the newsletter login is here. Everything has a 7-day trial period. So if you want to try it out, go over there and sign up right now.
Thank you so much, my friend. Shane Smolyan, wolftraderfutures.com, folks. We'll be right back after these few words.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the main thing that we want to get from all of this is that Shane had some real positive things going on, and I think it's good that we focus on that, because focus on the negative doesn't do any good. We will get through this, and we'll learn something from it, and we're probably getting ready to see more of these happening, because you can see how quickly it's shut down the world, and there's some bad people out there with bad ideas, so we've got to be vigilant about that. Someone's asked a question about the crude oil. Do I think it's going to go to $12? Yes, I do. I posted the chart. It looks like that's where it's going. It's got gaps everywhere. The fact that it's holding above $20, well, it's at $20 right now. tells me that we're probably going to drop. I mean, if it can go from, just, hey, look, back on September the 3rd, folks, we were at $69 a barrel. We're at $20 a barrel now. Somebody's got to be hurting. That's a big deal. So pay close attention to that. Make sure that you stay in the house, folks. That's the key thing all about this. You want to keep your distance, and you should be okay. Also, keep the white light out for Mark Twentyman. He certainly is going to need it. Jim's going to let me know how he's doing in a little while. So hopefully he'll be able to pull through it. That's the only person we know physically that is actually had the disease. Some people thought that they have it but didn't. Tucson is pretty much shutting down here. We haven't had any deaths. We've only had a few people here. Wear your masks for sure. Sarah just reminded me to wear your mask if you go out, because it's an important thing to not get this, and stay away from little kids, because they're like little culture tubes, we understand, and which is difficult when you're a grandparent, but when you're on Skype, it's not too bad. So probably in a month, maybe less, maybe 2 months, we'll get through all of this. We're going to have some good markets to trade. We're having great volatility and everything, and we want to watch these. We're going to be looking for buys here in natural gas on the 24/7 service, and also corn here maybe this week, to keeping a close eye on those, and potentially even hogs. So, but these are not for the faint of heart, folks. These markets jump around a lot. So live every day in an attitude of gratitude, and may God bless.